learners, I welcome you all to this module 14 on microfinance. In the previous module, we have discussed some important components of skill development and livelihood opportunities. In this module, we shall discuss microfinance in some detail. For any expansion of business or for starting a business, one needs capital. However, not all the people are lucky enough to have so much of capital to start a business. And this amount is relative. For one person, having 1 lakh rupees may not be enough because he or she wants it to start a business which needs rupees 50 lakhs. However, for another person, 1 lakh rupees itself may be out of reach and he or she would want a loan to start a business with rupees 1 lakh. Normally, banks are there to give loans. Banks take deposits from savers and lend the same to the borrowers who want to use this for business. The interest margin is the earning of the bank. But because it is someone else's money, they have to be careful in lending. Initially, they would trust and lend. But if there is little recovery, then others coming to them later on will suffer. This is true in many states of India, particularly Assam. It has become very difficult to get loans from the banks in Assam, and therefore business is not thriving. The Assamese people do not possess so much of capital that they can start a business on their own. If banks do not lend, can people borrow from someone else? Yes, there are the money lenders too. But the money lenders charge very high amount of interest on the money they lend. Big loans are not given by them unless there are adequate collateral securities. They use strong-arm tactics to recover the loans in case of default. Therefore, people do not want to borrow from them. Friends and relatives are there to lend too, but that is not a regular thing. It is seen that the Marwari society does help their members to set up business. Definition: microfinance may seem to refer to very small loans. It is true in a way, but there is something special about it. It has to do with groups and also with savings, remittances, and loans. The concept of peer groups is very important. The loans are given to a group of people from the locality so that when there is a problem of repayment, there can be peer help or even peer pressure on the members to repay the loan. This is very important. Otherwise, the loans will have to be structured like an individual loan, and there will be problems as in the case of bank loan. Individual loans are not easy to get from any institution if there are a lot of formalities. How did it start? The starting of modern day microfinance was by a non-banker, Professor Muhammad Yunus of Bangladesh. There have been others too who had tried lending small amounts to the poor, but microfinance as we know of it started from the experiment of Professor Muhammad Yunus. Muhammad Yunus used to pass by a village on the way to the university he was teaching. He would notice that there are many poor families who used to work with bamboos making baskets. He realized that even after many years, the lifestyle of these people never changed and they never became better off. So one day he asked them why that was the case. The reply was that the poor people borrowed money from the trader who charged them very high interest rate, so that the surplus was almost given back to them. Muhammad Yunus decided to ask a local banker to lend money to the workers. The bank refused. He told the bank that if he gives a loan to them and they repay, in that case, whether the bank would give them loans. The bank manager said that he would. Muhammad Yunus gave a small amount from his own pocket to the group of bamboo workers and then waited for repayment. His loan was repaid without any problem. Once again, he went to the bank and the bank refused. He gave more loans in the area to prove his point that the poor are bankable. But although his loans were returned, the banks refused to give loans. After that, there was much running around in the government circle, but the banks could not be convinced. Grameen Bank. At that point, he decided to start a bank himself with the help of his friend who was a minister. The Grameen Bank was formed. It was a special bank in the sense that the shareholders were all poor borrowers, mostly women. So the profits from the bank would go to the shareholders and therefore they would not mind paying high rates of interest, which is needed since the officials have to go to the doorstep of the borrowers to give loans. This is unlike any banking till then. Groups of people called affinity groups, just like our self-help groups, would be formed and the loans would be given to them. The individuals would be responsible for the loan he or she had taken from the group. There are also some cases where the activity would be done by the group itself and hence loan would be repaid by the group. The profits would be shared by the members. The borrowers were shown how to keep their accounts, and that also led to the empowerment of the poor people. People knew how to keep accounts now. The Grameen Bank of Bangladesh was started in 1982. According to Professor Muhammad Yunus, this bank is on principles which are completely different or opposite the principles on which conventional bank is based on. Indian experiment. In India and elsewhere too, such efforts were there to give loans to the poor. Myreda, a big NGO in Mysore, Karnataka, Seva Bank from Gujarat in India were NGOs which had given loans. There was a big jump in the sector when NABARD launched a scheme of microfinance where the affinity groups called self-help groups were the mainstay. This became the major microfinance program in India. Soon after that, the government of India to launch the IRDP program, where the formation of self-help groups was a requirement. Once the government took up the steps, there was a huge revolution in the sector. Almost every department started forming self-help groups for their own activities. Meanwhile, the NGOs picked up the scheme and started microfinance in a big way. NABARD and SIDBI provided some funds and trainings. In Assam and in the eastern part of India, RGVN started giving small loans called returnable grants as well as non-returnable grants for the NGOs to take up microfinance. RGVN also had its own microfinance wing for doing the work directly. It was something like the Grameen Bank of Bangladesh. There were also some foreign institutions as well as private investors who started helping the NGOs. CGAP of the World Bank too came to help the sector. Thus, microfinance became almost a household term. Soon, the bank started lending the NGOs and MFIs to lend to the clients. The movement became huge, but there was no intervention from the RBI or the government. Hence, the development was somewhat haphazard. A few NGOs who were practicing microfinance got together to form an association called Sadhan to take up the cause of the poor and the sector. Sadhan tried to get the act passed by the parliament to regulate the sector, but there was not much response. Interest rates. The issue of concern in the sector was interest rates. As the agents had to go to the doorstep of the borrowers to disburse loans as well as to collect repayment, the interest rates were high. In the beginning, this was not the problem, but when the loans were repeated for more than a year, the borrowers started feeling the pinch. This also gave a lot of surplus to the NGOs who did not want to reduce the interest rates because they saw that as an opportunity to earn good income. And this was never like this before. At the same time, the NGOs also thought that this was a good way to help the poor. Although the association Sadhan asked the government to intervene and start regulating the sector, there's not much response. Only a crisis developed in Andhra Pradesh, which brought the policymakers to the table to think about the microfinance sector. Because of the pressure from the microfinance operators, there were more than 70 suicide cases in Andhra Pradesh, and the local administration wanted to arrest the culprits. At that time, the RBI intervened and finally took control of the situation. It then brought the Maligam Committee report to regulate the sector. But it would regulate only those non-bank finance companies, the NBFCs, which were registered under the RBI. Since banks would help only the registered NBFCs, many NGOs formed NBFCs. In fact, since the regulation process was time consuming, many NGOs bought the existing NBFCs to convert them to NBFC MFIs. The sector started working without any major hiccup except in Andhra Pradesh again, where an act was passed which almost brought the closure of the microfinance work in the state. In the rest of the country, many NBFC MFIs were formed. After some time, the RBI came out with a policy of giving licenses to the NBFCs to form small finance bank. So there was a group called the SFBs, the small finance banks. At the same time, seeing the profits in the sector, some of the banks, mostly in the private sector, started doing microfinance too. Organizations like Larsen and Toubro, L&T, also started giving loans, and so did HDFC Bank. Some banks used to use the banking correspondent, banking facilitator models to reach out to the poor. Now, banking facilitators are basically there to help the banks, and banking the business correspondent, they work like a mini branch without the brick and mortar branch. So, business correspondent and the business facilitator became very, very common. Seeing the positive results from the MFIs working in Assam, many MFIs started their operation in Assam too. Then there were reports of exploitation of the poor women, and in Assam, they started raising their voices against the policies of these MFIs. Since the elections were approaching, the political parties stepped in. The new government promised to pay back the loans to the MFIs on behalf of the borrowers. Work is still going on regarding the loan waiver. The after effects of the steps taken by the government are to be seen. There is a process of giving back or awarding the microfinance borrowers today in Assam. There is no move by the central government to look into the sector other than giving responsibility to the RBI, although it is a case of loans to the poor for their livelihood, and hence exploitation can occur anytime. RBI started working on some more regulations. Whether these regulations will help the poor yet is to be seen. Criticism. There are studies to show that the microfinance scheme has not reduced poverty. If it is in conjunction with other livelihood programs, then it is a different story, because there are organizations like BRAC in Bangladesh, Shawa in India, etc., which have done very good work for the poor, because the objectives is really to assist the poor. If the organizations think that by just giving loans to the poor, they have done their duty, then this is going to be a big mistake. There are some discussion as to how there's a belief propagated by the Washington Consensus that the poor can be helped by giving such loans. If they cannot improve themselves, then it is their fault. So that way, microfinance actually is a cover for a lot of governments, the governments which cannot help the poor, and they give the responsibility to the MFIs or the microfinance institutions to do the work. But as a whole, the smoothing of consumption as well as providing for essential expenditure like family functions, accidents, hospitalization, as also for some productive work, the such capital do take place because of microfinance. If the program is taken up for these things, then without trying to keep the conscience clear, although falsely, by saying that the microfinance is there to solve the poverty problem, then there would not be any criticism as such. However, it is seen that the practitioners want to appear as social workers to get the accolades from the society. They mostly try to hide the effective interest rates or even their own salaries when confronted. One would know that the salaries of the top bosses of microfinance institutions are very, very high. As argued, the microfinance institutions could be worse than moneylenders from one point of view. Moneylenders have no qualms about being moneylenders, and they give small loans. Also, the interest rate is high. But the microfinance interest groups, the MFIs, few of them are good ones, but most of the others are actually right now, they're trying to earn income by giving loans at very high interest to the poor people. And that is one of the big criticisms. What are different organizations in India providing microfinance? Initially, there were the NGOs registered as societies that gave microfinance. Organizations like SIDBI and NABARD helped them. Then they also got some loans from ICICI Bank, which was a pioneer of some sort in promoting microfinance. Foreign donors came to the assistance of the sector itself, thinking that a poor country like India will be able to reduce poverty by spreading microfinance. There were also the profit-seeking investors from abroad who put money into some of these organizations. Encouraged by the amount of, after the Maligram Committee report in 2011, many NBFCs were formed to be registered as NBFC MFIs with the RBI. Some of them also became the small finance banks after a new RBI policy was introduced for this new segment. Today, there are banks like the HDFC Bank, Bandhan Bank, which are in this field. They are proper banks. Then there are the small finance bank like Northeast Small Finance Bank, NESFB, Jana Bank, etc. Another category is that of the NBFC MFIs like Grameen Sahara, Unako from Manipur. And fourthly, there are some NGOs too who are in their own areas of operation. Lastly, there are the NBFCs like Larsen and Toubro who are doing microfinance. So we have many groups of institutions which are providing microfinance today in India. The Northeastern regional scenario, what is happening in the Northeast? Initially, there were many NGOs which started microfinance, most of them with the assistance from RGVN. RGVN had its own microfinance wing also called the CSP, Credit and Savings Program, which was modeled on the Grameen Bank of Bangladesh. That CSP was hived off after creating an NBFC, and today it has become a small finance bank called the Northeast Small Finance Bank, NESFB. In Assam, because of the government policy, the NGOs should not carry out microfinance since it is a commercial venture. Many NGOs stopped doing microfinance. Cluster level federations have been formed and they have been doing microfinance encouraged by the bank as well as the government. Today, there are quite a few MFIs in the Northeast region. Most of them belong to Assam and a few to Manipur. In other states, number of NGOs are doing microfinance too. NETFI has assisted most of these microfinance with loans. There is only one SFB in the Northeast, and that is the Northeast Small Finance Bank. But most of the SFBs from outside the region have their branches here. In fact, during the Assam crisis, where the poor people had demonstrated against the microfinance, government found out that 38 such institutions are working, that is, giving loans to the poor people. Assam had quite a few NGOs doing microfinance, but because of the government policy, the number has shrunk. The number of Hansois, which are informal lending institutions, are also working in Assam, giving loans to the local people. There are similar traditional institutions in Manipur and other northeastern states who give loans. NESFB, Grameen Sahara, Asomi, Nightingale Fin Services, Satra, Azagar, Unako, YVO are some of the organizations in the Northeast which are famous for giving microfinance. Self-regulation. For self-regulation of the NGOs, MFIs and the NBFCs, there are two associations formed by the MFI NGOs themselves. Sadhan is the older one, formed in 1999, when the microfinance movement had just taken off and there were no regulation at all. AMFIN came after the formation of the large group of NBFCs who were bigger than the NGOs in terms of their reach and wanted to have a different association to look after their interests. Now, because it is to do with the poor people, therefore, these two organizations, Sadhan and AMFIN, they were there to regulate their own business. At least the members should not do anything bad. RBI gave recognition to both these organizations later as SROs, called self-regulating organizations. The MFI and NBFCs are regulated by the RBI. The NGO MFIs are not regulated by any organization. Even the informal institutions like the Hansois, the cooperatives, the banks are not regulated by the RBI. Banks are of course regulated by the RBI under the Banking Regulation Act, not under MFI regulation. So because of these various regulatory provisions, now there is actually some sort of chaos in the sector. One group is regulated by RBI, one group is not regulated by RBI. As the banks are not regulated by the RBI, just like the NBFC MFIs, they have the advantage of earning a huge spread between the deposit rate that they pay their savers and the rates that they charge the borrowers, which are something like 26-27% initially. NBFC MFIs can take a spread only of 10%, while the banks can take a bigger spread. So today, the small finance bank and the banks are really big gainers in this microfinance operations. They earn a lot of money. And that's why their salaries, etc., are very, very high. Informal MFIs, the Sansois and the SHGs. There have been lending institutions in the villages and even in towns, formed informally to run various activities, including lending. For example, in Assam, the Namghars have their committees and sometimes they help the poor people by lending some money to them when there is no other source. So sometimes this becomes a regular job because there is demand and there are separate units to run such business. Even in some colleges, you find the professors get together to run such honsois from where they take loans. In many villages, the youth get together to collect money and then they set up honsois. These honsois pay a rate on the deposit kept with them and then give loans to the borrowers in their locality to known individuals. In Manipur, the Marup are quite common as a lending group. It's very, very common in Manipur. In Assam, it is honsois. These informal institutions fulfill the needs of the local people because getting a loan from a bank is very difficult or time consuming. The self-help group SHG concept was started by NABARD. A group of about 10 women or men, they were encouraged to form a self-help group by giving the group a name and having regular meetings to decide on various things like how much they should save every month, how much they should lend, and what rates. When 6 months is over, the SHGs can apply for a bank loan and also avail of various government schemes. 6 months period is needed to see that the SHGs become very mature and that it will survive for some time at least. Peer pressure and peer help come to play an important role here. Nowadays, in every department, there is a concept of SHGs, self-help groups, so that the government schemes can be run through them. Under the NRLM or National Rural Livelihood Mission and NULM, that is National Urban Livelihood Missions, all the poor women are being organized into self-help groups. Then there are the area level federations and the cluster level federations. Revolving funds are given to these cluster level federations to give it to the SHGs and then to the members. This arrangement is working very well. Bank linkage is also being done in a very good way as the credit history of the borrowers are being prepared and also known. Employment opportunity in the sector. Many NGOs who were struggling to survive became strong by starting a microfinance and the earnings were good. As I said, they could take about 10% difference between the deposit rate and the lending rate. The lenders have become employment givers, although many would have started NGOs because they had no other employment opportunities. Thus, some of the MFIs have more than 1,000 people working under them. So, through the microfinance system, the NGOs become actually employment giver. At the ground level, the persons are normally class 12 pass, but many of the MFIs recruit only graduates. Since there is no specialization, the smart people with presumed integrity are recruited. At the interview, the questions asked are normally about their awareness of the microfinance system, whether they know self-help groups, whether they know the NGOs, and whether they know some computer and accounting. Then they are easily picked up. Basic arithmetic is needed and also the skill in calculation of some basic statistics and interest rates. However, ideas about the society, about the condition of the poor, some agriculture, livelihood, they are very important in getting a job in the microfinance sector. It is also seen that formation of a group like the self-help group is more important to get a bank loan and also government grants than when applying individually. A group of uneducated women can get a loan more easily than an MA or a graduate. Of course, this group has to have papers like records of meetings, savings, borrowings within the group, and the members do not have to have a group activity. They can actually individually borrow from a bank. Only thing, they have to show that they are a group. It is just that they need to exist as a group so that peer pressure and peer help can be used later and the banks can see that there are papers. Normally, our youths do not keep papers, but self-help group do have papers and therefore they are accepted by the banks for lending. Government to expect such groups to work better. Of late, the concept of farmers producer organization FPOs or FPCs, farmers producers companies, have been making headlines. NABARD, Small Finance Agribusiness Consortium, SFSC, and other departments are also promoting such FPOs and FPCs. Mudra loan scheme is the latest in the line of helping the small entrepreneurs. In the northeastern region, NETFI too provides small loans to the individuals. For the women, there are special schemes and the interest rates are lower at about 7% than those charged by the MFIs. MFIs can be charging about 22 to 26%. There is a way to make a living by forming MFIs too. In the villages, the youths have formed the honsois because of getting proper license from the bank or the RBI is very, very difficult. Some NGOs and youths have bought NBFCs and then they converted to NBFC MFIs. When there is a requirement of large sum of money, then they can borrow from the bank. For the northeastern region, there are some relaxation regarding licensing process of the RBI. So outside, if they give 4-5 crores in the northeast, and 2 crores is needed to start an NBFC MFI. One can form an FPO, that is the Farmers Producer Organization or Farmers Producers Company, and then start working on loans to the members. Since every farmer needs working capital, a small fund to assist the farmers will be appreciated. The farmers need help in this, and as they do not have the time as well as the understanding to run for financial operations. So FPOs and FPCs can also be the next level of microfinance institutions. Then there are the banking correspondents or business correspondents and business facilitator or banking facilitators who are employed by the banks to do their work. So this model is going to work very well now because there are a lot of complaints against the MFIs, the microfinance institutions who are charging very high. So through the BCs and BFs, the banks can reach the poor people in the villages and give loans at a much lower rate. With good knowledge of deposit and lending, the youths can become member of this group. So they can help the poor people and at the same time earn a living. For small loans, forming an SHG is a good option. Banks prefer to give loans to such groups. They have some papers to prove that they are bankable. Most of our youths do not have any paper to show that they are bankable. One way to do is to show transaction in the bank account. For example, if a dairy unit is to be planned, then the existing milk production, sale, etc., all need to be recorded to show the banks that one is serious about the loan. Usually, fresh graduates do not get loans, but when an SSG is formed, their credibility increases. So, formation of groups is very, very important if our local youths they want to start business. Even if this individual level, by forming a group, they can go to a bank and show the papers that they are bankable. So, with this, we come to the end of this module. So, next time we'll again go for more details.